Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing how to calculate property taxes when purchasing a property. Now, real estate taxes are usually the biggest, if not one of the biggest expense items, and learning how to calculate them, estimate these property taxes is crucial when underwriting properties. Now, first off, there are three main ways of valuing a property. Sales comps, which are usually used for residential properties, 1 to 4 units, but there's usually not enough like-kind sales comps in one municipality when you're dealing with income properties. For example, you're buying a 12-unit apartment building built in 1982, and you're trying to find a comp for that in the near area that's recently sold. It's very difficult. The next is replacement costs, which is usually used by insurance companies, and it's not a very useful way, though, of determining the true value for resale. And number 3 is the income approach. And this is what's usually used, where all we need is the net operating income of a property and then the market's cap rate to figure out what the value of the property is. Now, if the property is on market, the broker will usually have a pro forma. And with this is where they will feel the property taxes will adjust to. And this is great to consider, but you always want to calculate the estimated taxes yourself. Like, for example, if they tell you where rents could go to on property in the pro forma, you want to verify that that's actually realistic for the property you're looking at. Now, about the property taxes are set by the county and city property assessor, appraiser. You're trying to determine where taxes have been in the past and where have they adjusted to after a previous sale. That's very important. You want to utilize the property info from the broker or seller, the purchase price, the current taxes, the current valuation, historical sales and bumps, how often do they reassess, and what is the process. Then based on the historical numbers, what is the millage rate and assessment percentage? Now, this sounds very complicated, but let me explain how to calculate them yourself. Now, first, I would Google the city and the county, and then the state, and then add tax assessor in there. And you're going to find the tax assessor's page for the municipality, usually the first organic search result. Municipalities make it very easy to search for property information on their website since they do not want you calling in. Find the property search tool and search the property by address. It will allow you to pull up all the information on the property. First, I would find the current taxes and the current value stated on the county's website. You will see values for just land and just improvements, but the total value is what you want. Now, if we were doing something about depreciation or something like that, then we'd really care what the land was and what the value of improvements is, but the total value is what we need when we're looking for current taxes. So that's what you want to find. You will find an assessed value, but you want to find the total value or total market value and divide it by the current taxes to find the tax rate. Next, figure out what you feel the property will trade for. Ask the broker if they've done any type of reassessment, recalculation of where they think the taxes will adjust to. They had to use some sort of sale price. So ask the broker where they think it will trade, where it's going to sell, and use that number. This is where learning about the reassessment process comes in. Most municipalities will reassess the total value at 70% to 90% of the sales price. Now, you can run different models on different estimates of where you think that will end up. For example, let's say a property has a $100,000 total value and the taxes are $2,500 currently. Now, the tax rate is 2.5%. And the broker says it will sell for $150,000. Well, you can now take 70 to 80 or 70, 80, 90% of the estimated sales price and multiply that by the 2.5%. And that will give you an idea of the new taxes. Now, I probably would shoot for 80% and possibly make a couple underwriting scenarios at 80, 85, 90%. And lastly, I would compare that to the property taxes on the broker's pro forma. If you're somewhat near where they are, then you know you're in the ballpark and you're on the right track. But this is important to do for all different taxes. And I would also, when you're reviewing any of the expenses on the property, you have to also take this into consideration. Is this accurate or it's not? Just because that's what they're paying doesn't mean that's what you're going to be paying. And property taxes is a main thing. If you've ever bought a 1 to 4 unit residential property in the United States, you'll know that there's always a rider that comes on there that you have to sign that tells you about how property taxes the owner, the seller is paying currently is most likely you're not going to be paying that in the future. And you have to sign that so you agree that this is like what it was before, it's not what it's going to be. And most people don't do that. They just hoping that it doesn't go up too high. Now, a few closing thoughts is, if available, you can download and view the current tax bill, which is normally available online from the properties page on the assessor's website. Now, this is what is sent out to the owner, and this bill will break down what the total tax amount consists of: the city, the county, the schools, the police, etc. I mean, usually in municipalities in the United States, schools and police are going to be the largest line items on any type of property tax bill. But that really doesn't matter too much. If you really want to dig into it, you can find that. But the main thing is you're looking at is current taxes, and then also the total market value. Now, if you're buying a property with multiple parcels, make sure you're not missing anything there. And usually there's a link for a parcel map, which you can compare to Google Maps right there on the assessor's page. Next is make sure there are no special assessments or tax rebates. If you're buying a property and maybe from a developer or someone that went through and redeveloped a whole area, maybe because it was a low income area or something else, they might have gotten a special assessment, a tax rebate, a tax abatement, and you have to make sure that this isn't going to expire anytime soon. Or it's something that, it could jump years down the road and you don't really know. Then you find out that, wow, a huge part of my taxes was being rebated because of this previous developer that had gone in and done all this work. Now, usually it'll take 1 to 2 years for taxes to be reassessed. And I would always call the assessor if you have any questions. I'd probably do it either way and tell them what you're looking at a property, what you're looking at, you're thinking of putting an offer in at, where they think the taxes will go. And if you're using your own estimates, if you're using the pro forma from the broker, and if you're speaking to the tax assessor's office, you have now three different kind of routes of getting the property taxes, of where they think it's going to recalculate to. And this should help you when you're underwriting a property, really figure out where it's probably going to calculate to, or it's going to recalculate to and reassess to in about 1 to 2 years. Now, remember, your lender is going to do the underwriting on the property as well, and their final value and appraisal is going to be based off of this type of analysis. So it's important that you've done your analysis and you know exactly what you're going to be looking at for expenses, because this won't happen right after you buy it. It's usually 2 years. It depends on the municipality, but I've seen 1 year, 2 years, 3 years. It also depends on if there was any kind of increase in the near future that happened, that happened in the past, that could happen again in the near future. So make sure that you speak to the assessor's office and review all the information, and that should give you a very good idea of where you can expect the taxes to readjust to. Well, I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.